Good afternoon, good evening, good night, depending on when you're watching this. If you're watching it live or watching it on playback, it is Defion Labs. I'm your host, Don, hardest working nobody in Bitcoin, along with Troy, the hardest working nobody in crypto, who's going to talk to you about not doing leverage and not going ham in regards to his some of his coins and some of the things that we saw happen in the last 72 hours in crypto that was kind of wild and crazy, unless you like to watch your portfolio lose 25% in a 24-hour period. I don't know, maybe some people like that, you know.
Well, even if you're holding Bitcoin, what was the drawdown on Bitcoin?
It was over 20%. Bitcoin was at one point
Bitcoin's down 25% from
at one point it was about 25%. When
at
it
one
hit,
point it was at 32%.
was it that? Was it
Yeah.
that low? Yeah.
When it hit 48, wick down.
40. Yeah, some exchanges 48.
Yeah.
I saw 49 and what I use. So we're gonna jump right into that because that's kind of the news of the week. So let's take you back to Sunday night in Japan, because that's really what kind of started all this stuff in the crypto markets. Japan saw its largest one-day drop in 35 years.
1987.
Yeah, 2008 GFC never experienced that big of a one-day
Yeah.
drop. Even the COVID crash, when markets crashed in March of 2020, it didn't crash this hard. It lost 12.2% of its value in that trading session. And what's really wild is that it took Japan's Nikkei, which is the equivalent of our stock exchange, about 35 years to reach an new all-time high, which it did earlier this year. 25 days after, it dropped 27 total percent in 3 combined trading sessions. So it reaches an all-time high. 25 days later, it loses 27% of its value. And I got this tweet up here, which I thought was pretty funny to share. Imagine being a Japanese boomer who held through the lows for 35 years, finally broke even, only to witness the biggest crash in history. Then it's got the charges cascading. So we won't get too big into the weeds into what really happened, but we can talk about rough edges of what occurred in Japan. So Japan has had basically zero, because their economy's been so terrible. They've had 0% rates, like literally less than 0% rates for a long time. And savvy investors have gone into Japan, bought the yen at basically free.
It was like a free money glitch.
Yeah, it was a free money glitch. And they borrowed the yen, and then they bought other assets in the U.S. markets, in Asia, in Europe, and then basically got a free lunch for a long time. And then with this inflation in Japan kind of accelerating, the BOJ had to take action and raise rates. And when they raise rates, all these people with these 0% interest rate loans now owed some interest on this money, and a lot were margin called, which caused people to have to sell assets to cover the margins, which sold the Nikkei first, selling assets right there, and then you just watch it cascading when markets opened here in our side. People selling assets here, selling it in Europe, and all around the world. The one thing that I think people don't really truly appreciate and recognize, especially with us being in an election cycle now and us talking so much about like how we think one side or the other has an effect on our stock market and our trading markets, we really, really, truly get to see, and we got to see it on Sunday night. There isn't really like a U.S. market per se. It's a global market. Like when one thing bad happens somewhere else, it cascades into every single market. So when Nikkei dropped 12%, you could see the futures literally in real time getting ready to be a bloodbath, and then things. I mean, the NASDAQ was down as low as it was like 6.5, I think, at the very, very low on Monday morning. We saw like a 6.5% decline, which in the NASDAQ, at one point it was down 1,000 points in the NASDAQ. That's a huge number.
Yeah.
I don't know how many times in history. Again, it's because the NASDAQ is a smaller number than the Dow. The Dow's in the 30,000s. The NASDAQ has been in the teens. But to see like 1,000 point drop in the NASDAQ, I don't know if we've ever seen that. It might have been the first time that we've ever seen a 4-digit drop in intraday trading in the Nasdaq.
The Nasdaq's currently down 14%. But regarding what you said before, like the BOJ, the Bank of Japan, they raised rates to 0.25%.
Yeah, it was like nothing.
It was like nothing, right? And
Yeah.
it caused this.
It had that
And
big
then
of an
they
effect.
flipped. They flipped. Did you see what happened?
I saw today they reversed. They
Yeah.
reversed that, and their market's open in 20 minutes. Actually, at 8 o'clock. Well, while we're filming, I'll jump on and see what the Nikkei is doing. But the futures were negative earlier. I haven't looked, but the futures were even negative on that news. And again, that's kind of a precursor to people here saying, because of what happened on Sunday, Monday, and into Tuesday, that the Fed should have called an emergency meeting and lowered rates 50 basis points in an emergency meeting because of what happened. But like
that would affect
the markets.
Everything's correlated.
The markets don't really like things like that because that really shows that something's wrong. And when something's wrong, then there's fear, uncertainty, and doubt. Yeah, panic.
That's what I've learned from all this is like, it's a global economy, and whatever the Fed decision they make affects foreign markets, and the BOJ or the Bank of China, like all these decisions, they have to realize that this has a rippling effect across world economies. So it's something to pay attention to moving forward, is not just, the NASDAQ and what's going on in the U.S., but focus on what's going on in these foreign markets too, just to protect your downside. Because, this hit people with a blind side. So you have to be very careful and realize that, this is correlated.
Yeah, 100%. Also, I was joking around about the leverage and stuff like that. If you want to share that with the viewers, you can. You don't have to, but it is a good time to kind of talk about some shit that I've been preaching since the beginning of this podcast. I'm not a trader. Never have been a trader. Definitely not a trader in crypto. I'm a buy and hold type of guy. Obviously, the Bitcoin maxi. But like when you're taking risk, just holding a lot of crypto. Yeah. Just holding crypto, not trading, just holding crypto, a crypto heavy portfolio, heavier than just Bitcoin, is taking risk, because on downswings, you're going to feel it much more than a Bitcoin maxi is going to feel it, which we talked about, right? On just that side. When you're trading and you're putting leverage positions, even in a bull market, which we're still in, it's still a bull market. Even in bull markets like now, like it's not unnatural to see 20 to 30% drops multiple times. Like we talked about this before this bull market started, about how last bull market we had like 20 to 30% or more drops in the last bull run. And here we are just experiencing a 30% one in Bitcoin over a 48-hour time period. Like that shit happens. And a lot of times it'll happen when you don't even expect it. You think things are going to be going well, and you have those leverage position trades out there to the upside, and then something like this happens, and it can really decimate a portfolio.
And what's tough about, like, especially the people that are degens that are using more than optimal leverage. So we have an optimal leverage efficiency table, which shows like the optimal leverage based on the beta of each coin is, for example, Solana's 2.3x, and then Ethereum's 3x, Bitcoin's 3x, depending on the beta. Right, so the people that are, taking their lever and scrolling past optimal leverage definitely got wiped out, right? The product I was using was a vault where there's no liquidations, meaning that the managers managing the positions are rebalancing, making sure that you're within the 2 to 3 optimal leverage efficiency. And even after this, 25% drawdown, if you're using, 3x leverage, 2x leverage, you're seeing a 70+%, hit in your position. Especially with alpha decay, meaning that these companies, these products, they'll take rebalancing fees, interest, funding rates, and
they got to make their money,
and then they're So I calculated on the product I'm using is it's 43% of alpha decay over 4 months. So it's a little over 10% per month. So ideally, when you're using these products, you want to make sure that you're holding them during an uptrend, not during sideways price action or downwards price action. And what luckily, I was smart about it. I allocated only 15% of my personal portfolio to this because that's something I was comfortable with.
But were you?
No, I was, and it was going well for a while. When ETH went from 33,000 to I entered at like 2950, and it went up to like 3,400. I was up a few grand, and then we had this black swan event that you can't really predict. but it's tough. It's learning lessons. It's getting liquidated or not getting liquidated. But playing with leverage and then not going your way definitely forces you to look inside. And this is something that I'm doing is I'm rebalancing my portfolio, re-auditing my positions, going into the majors right now until we have positive momentum on the upside. I have a thread here right now, and it talks about portfolio positioning. And this is how to, especially after last week's, you want to use this to your advantage. If you're poorly positioned and you took a big hit, I would just say survive, right? If you're well positioned, hold. And if you're in a God position, buy. Meaning, poorly positioned, if you have trades on margin, high interest debt, credit card, in over your head, unable to afford real world life expenses, don't have spousal buy in on your risk, over allocated relative to your padding, no emergency cash fund, and too many speculative crypto assets that won't make it through this carnage. Bad meme coins, bad altcoins, narratives aren't picking up. You're poorly positioned. Now, if you're in this position, just survive. The second is being well positioned, meaning you're in no margin trades, you have good debt, for example, mortgage, you're able to pay for real life expenses, you have lifestyle chips on the side, and even if crypto drops to zero, you have an emergency fund and spousal buy-in allocated to crypto blue chips that are going to make it, going to survive this carnage. God position, meaning you're just a God. You're just you just been here for four cycles. Everything into well positioned. Plus, you have a sizable portfolio of cash to buy in. You have some dry powder to buy in on this, which I don't recommend having more than 10 to 20% of your net worth in cash because you want to be allocated, but you also want to have some dry powder to buy on the dips. So if you're poorly positioned going into this, don't despair. We all start here during our first cycles. Your job is to survive the next couple weeks and months to come. This too shall pass, and then take steps moving forward to ensure you're never in this position again. It's painful, it sucks, but the only way to get better is to go through these experiences and learn from them. Now, if you make this mistake more than once, twice, then maybe you just have a gambling addiction. But this is especially even if you're not on leverage and you see this size, because I know the altcoin market is decimated, 50% drawdown on the total, excluding the top 10 crypto coins. You're seeing a 50% haircut in your portfolio. So this is a time to reevaluate your portfolio. If you've been in since 15K, you've been accumulating during 2022, you're still up on your positions, but you got to realize that not everything goes up and narratives change. You got to be able to adapt and pivot when times like this happens.
I will not move from my thought process that leveraged. I mean, I don't mean this to you personally, but I just think leverage trading in general, especially in crypto, even more so than TradFi, is just a sucker's bet. Mm-hmm. I just don't think there's enough upside value to negate all the downside risk, which is huge in crypto. Because, like I said, in TradFi, when you're leverage trading, you're dealing in a market that single-digit percentage point moves, right? When you're dealing in crypto, you're talking like you can have one day of 30% down with no circuit breakers, right? There's no circuit breakers in crypto. There's circuit breakers in TradFi that could even assist in you not being liquidated because the circuit breakers go off and the trading stops, gives you a chance to react. I just think that anybody that's leverage trading crypto and is not doing it which I've talked about before, where that's the only thing you're doing it 60 or 70 hours a week between trading, watching charts, studying. If that's not what you're doing, you're not in the long run, you're not going to win, especially in this market that gives you the benefit of the 4-year cycle. And that if you hold for 4 years, you're always in the profit no matter what. And you're just fucking that up. Yeah. You're messing the easiest trade of your life. You're messing it up because you're leverage trading
and you're trying to get fancy during the we're in a boring zone right now, right? And 100%. We're going to be entering the banana zone. So it sucks that you get liquidated or you lose money right before, the fun really starts. And the tough part about everything is, the liquidity proxies I'm using we're showing bullish, right? And this is the first time where global liquidity is actually inverse related because of the negative sentiment in the global markets, whether it's the war with Iran and Israel and it's the BOJ raising interest rates, causing a black swan event, people getting liquidated. Like everything was pointing up. All the indicators, the analysis that I'm doing, whether it's a liquidity proxy, whether it's an MTPI, the total market cap, everything was showing that we were headed up, right? And then this just happens, and it's tough. It's not like it's it's not like I'm sitting here, leverage trading with no fundamental analysis.
It solidifies what I said.
Yeah.
Like you can do the best job at analyzing everything possible, and the market can say a big F you and screw it all up for you.
Yeah.
And you mentioned something else too, like the Iran and Israel thing is a event that we don't even know, like.
It's like
you
can't predict that. Like,
it's inevitable that Iran is probably going to strike Israel again in retaliation, and then Israel will strike them, and then you got this escalation of war, which is obviously terrible for all markets. And crypto, whether you want to believe it or not, or feel whatever you want to feel, there's a correlation between the Bitcoin and crypto markets and traditional equity markets. So when those things go down, crypto goes down. Those markets only trade in a certain time period. Crypto trades 24/7, 365. So like we feel those events not only harder, but like when they happen on the weekends, like has happened before to us. Like when something happens on a Saturday or a Sunday, like we feel it before TradFi feels it. So it's not long-term beneficial in my opinion to trade leverage in crypto.
To say something positive about liquidation and leverage is looking at the liquidation heat map on the 3-month chart. There's not much more downside. I mean, we might get like a retest of the lows, but there's not many meaningful amount of money where people are shorting right now. Looking at the 1 month and the 3-month heat map, we're definitely biased that there's you can see on the C map. I'll pull it up when we do the playback. But there's a lot of people shorting they're shorting, and they have their stop losses above 70K. So if we can meaningfully break above 70,000 to 73,000 and have a couple body wicks or body candles hold above, like we are going to explode. It's just like we're in this weird range right now that we just can't seem to break out of, and it's tough because Bitcoin already broke its all-time high. Ethereum's underperforming, but if you look at Ethereum, it's at fair value. Like they're like buying it, like based on the Z-score I'm looking at, the market value for ETH, like it's high value. Like this is something you want to accumulate. Bitcoin still, fair value. So Solana currently is the king right now. Like it's outperforming Ethereum, it's outperforming Bitcoin. And what I'm anticipating and what I'm assuming is people just like the user experience on Solana, cheaper fees. It's more user friendly. Ethereum's,
it's also a lower dollar value and easier to make more money in because you have to invest less to get the return back. And
Ethereum is you would argue it's the king of layer ones besides Bitcoin, but there's more utility. Like I would argue there's more utility on Ethereum than Bitcoin for now, at least. All the DeFi on it, all the other stuff that's built on top of it.
Yeah, there's utility, but it costs so much to use it.
And
all.
The fragmentation of the layer 2s are extracting value from layer 1 because people are just all that money's flowing into these layer 2s. There's so many layer 2s that it's hard to hold that value on ETH. But I believe ETH will be the chain for financial transactions. We have the ETFs. I don't think do we have a podcast since we have the ETFs now?
Yeah,
the inflows are like absolutely insane. A little bit of outflows from Grayscale, but that was anticipated. I think what was the drawdown after the ETF for Bitcoin? It was like 20%. ETH is currently down from its all-time, or not all-time high. We'll say the local high back in March, April. It's still, it's down 40%. Like the ETH maxis are really feeling it, and even on the timeline, like people are just very uncertain of Ethereum's future, just because they're slaves to volatility. But fundamentally, I believe we will recover. We will get out of this. So, it just yeah, it's tough.
Real quick, breaking news a couple of hours ago that the Ripple case is finally concluded with the SEC. I don't know if you saw that. Ripple has been ordered to pay a $125 million civil penalty, and that will end the Ripple versus SEC case, the saga that's lasted 8 years. Long time, right? Long time. And I think, I mean, I don't know for sure. I mean, I argue with Ripple people all the time and our XRP people all the time to kind of tell me what the hell that thing does, what the value of that thing does, because it's supposed to basically transform the banking system. But they've created so many things since that I don't know why they would even need XRP. That's another conversation. But the coin itself has really done nothing. It didn't do much last bull run either. Like, didn't perform. I wouldn't say it outperformed. So it's been 2 cycles since that thing has done anything. And this has been part of the reason because of the uncertainty with this case. I'm very interested to see how this coin will react now this full bull cycle with this case out of the way.
Yeah.
I still think it's shit. I think it's worse optically than it was last cycle. And I thought it was getting bad last cycle. But I think so many people are just fed up in that, you know, the promises of the coin. I don't really think there's. I'm not a fan. Haven't been a fan.
What do you
remain not a fan?
What are the probabilities that the top is in for Bitcoin?
Top is in for the cycle?
Yeah.
Almost 0.
And why is that?
Are they going to stop printing money?
No.
When I was sitting in the parking lot waiting for you guys to come, I was listening to Kramer, like one of the bearish people on the crypto space. Like, he in and out. He said something today that like I had to like look it up online to make sure that like he really said it, because I'm sure like people like tweet in real time, and they were. He made a statement. He was talking about gold, and he was actually true when he said this. He said the only thing that has really stood up as a consistent store of value during all this crazy chaos has been gold. And it really has, even more so than Bitcoin, because I mean, gold didn't drop 32% in this whole.
Like down 4%.
It dropped, very low, and Bitcoin definitely outperformed that in the downside. But he said, if I'm going to hold something for the long term, it's going to be gold, and it's going to be Bitcoin. And he said what I just said, which is, I think, the whole reason why I answered the question the way that you did, and I would have even without hearing Kramer say it. But he's like, as long as they continue to print, which they have to do, assets like gold and Bitcoin will keep moving in that direction of going up in the long term. So we are getting ready for a 50 basis point cut in September. It's
And
almost basically locked in.
Are you how certain are you for this? And how do you think the markets are going to
Certain
react
for
to this?
what?
The 50 basis point cut.
Not completely certain, but there's going to be a cut. It's either 25 or 50.
Yeah.
I don't think there's a big honestly, like, between 25 and 50, I don't think it's as big of a difference between 50 and 75. I think 75 would be a big deal. Because if you remember when they raised 75 2 in a row, that was a huge deal, right?
Yeah.
So I think a 75 basis point cut would be very big as opposed to 50. And I think 25 and 50, I mean, I know there's a difference, and I understand that there's a relative difference, but I don't think it's that big of a deal. So if it's 25, if it's 50, there's going to be a cut. That's the thing. We haven't cut in 2 years, 18 months. So now that they're cutting, that means they're easing. That means that liquidity is going to be increasing.
Do you think people are going to be front running? Because, you know, people that are professionals, a lot of people are front running global liquidity conditions. Do you think the markets will have a slight recovery leading up to the cuts, and then based on the decision, we'll have, volatility, obviously.
Type of situation? Maybe. I mean, that's a short-term mindset.
Yeah.
I don't look at things in terms of short term. I look at things in longer. Like, you asked me if the top is in this cycle, and I said no. It doesn't mean that we're going to get a top in the next. We may not get a top until December. We may not get a new all-time high. We may not get a new all-time high in Bitcoin until December.
I was thinking even next year.
No, because if you look at prior cycles, typically right around November, December.
But Bitcoin already hit its all-time.
I understand that, but I'm telling you, Bitcoin did. The rest of the market didn't. I off the top of my head, I can't name another coin that reached an all-time high so far this cycle.
Binance, BNB.
Yeah, I don't even count. That's not even really a
Yeah.
coin. That's an exchange coin.
Yeah.
But I know. Okay, sure. I'll give you that one.
Dog with that.
It wasn't around last
I know.
cycle. So you still have the rest of the market to still get to the all-time high, which typically Bitcoin doesn't hit until December, but we did that already. Okay? But Bitcoin has had this huge lull. I mean, we were in the 60s for like a quarter, right? Over a quarter, just
Mhm.
hanging out. Now we dropped into the 50s. We'll probably hang out here for a little bit and eventually make our way back up. And I think before the end of the year, we will see the new all-time high.
But what about elections? Do you think that will have any impact the outcomes? Because I know we have Kamala Harris running, we have Tim Walz against Trump and Vance. Do you think that will have
Short-term effects.
Yeah.
Because the president, administrations are irrelevant, really, when it comes to crypto. When it comes to markets, like both administrations were responsible for. I mean, whether they want, we've talked about this. I don't want to go back down the street, but like both administrations were responsible for COVID. Both the COVID response. Both administrations were responsible for inflation that resulted from that. So we've kind of seen already what we're going to get from these two. Yeah, okay, if Trump comes in, the idea is that he's a Republican. He'll give tax cuts. He'll be friendly to the financial
capital.
But we just had 4 years of Biden, and we hit an all-time high under Trump. We hit an all-time high under Biden.
Yeah.
So, I mean, it's not like we haven't done it under either one before. We've seen that. So, I mean, I don't think that, like, when you're looking at the 4 year, I mean, they get 4 years, and that's going to be in the middle of two cycles. Like, I don't think that there's really a long term, because again, we're playing a long game here. We're not playing like short. Yeah, you're asking me before the end of the year. I think there's a higher likelihood with Trump winning of us hitting 100K than there is with Kamala winning. That I will say. I think if Trump wins in November, we may see 100K sometime after the election before New Year's. If Kamala wins, I still think we reach all-time high again, but I don't know if we get enough rocket fuel to get to 100.
So when you're saying all-time high, the all-time high of the total crypto market cap is $3 trillion.
About Bitcoin. I'm talking about Bitcoin, and I think when Bitcoin makes the move at the end of the year, that's when the rest of the coins start to make theirs, because that's when it usually happens. Bitcoin was early, but regular market cycle is in the next couple of months, and that's when we'll be seeing things really start to move, and it's lining up according to liquidity. It's lining up according to easing. I mean, it's fascinating to see how things are lining up. Right, how the 4 year cycle always plays itself out. Because I think that when they lower it in September, the likelihood of them lowering it more the rest of the year is fairly high. Because you got 2 more meetings. You got September, you got October. I believe either November or December. Like, we may get 3 more cuts. We may go a full 100 basis points down
within this year.
Potentially. I'm not saying it's going to happen. I mean, if they do 25 in September, it'll be really tough to get there. But potentially, we could see a 100 basis point drop in rates before the end of the year. So, as long as they continue to, I mean, the only thing that blasts my thesis out of the water with Bitcoin, the absolute only thing that blasts my thesis out of the water with Bitcoin, is if we push the reset button and we allow complete default on the debt, and we stop spending, and we turn the printers off and say we're just going to fucking go dry turkey and see what happens. Let it crash, see what happens, and whatever's left over, that's what we do. That's what they have to do to stop printing.
But they would destroy lives.
I understand that. That's why I am 100% certain that we'll hit another all-time high this cycle, because they can't stop printing. And here's the thing, though. You have to keep this in mind. Like, we hit an all-time high in Bitcoin, not adjusted for inflation, though. That's the key. Adjusted for inflation, we're still not at the all-time high. I believe
market cap-wise.
Either or.
Yeah.
Use whatever number you want. But the 73,000 number has to be I think when we hit 73, it had to be 76. I don't know where it's at now. I mean, inflation is, I don't know what the number is. So let's say somewhere between 75 and 80. is the adjusted for inflation new all-time high number. So technically, we haven't even really hit that yet. So when we hit 100,000 this cycle, we were supposed to hit 100,000 last cycle, right? So 100,000 should have been hit in 2021. When we hit it in 2025, 100,000 in 2025 is not 100,000 from 2021. So you got to remember that we're playing this game of number go up, but it's not the same number. Like 100K is not the number that we thought that we were looking at in 2017. It's not the number we were looking at in 2021. It's a number. It's a six-figure number, and it's going to feel really good when we hit it. But it's continually a devalued number, and that'll continue to play itself out the next couple of decades, right?
Yeah.
That's why hitting $1 million in Bitcoin, I think, is inevitable. The time frame, I don't know when it'll be, and I don't know what $1 million will look like when we actually get there. Which is why I always say I don't want Bitcoin to be $1 million in the next couple of years, because that would be catastrophic. That means that I'm going to the store and I'm paying $300 for a loaf of bread.
Yeah.
You know what I'm saying? Like,
Bitcoin dominance reached an all-time high, or not an all-time high, but this cycle's high of 57%.
that wasn't an all-time high? I mean,
Well, the
all-time
all-time high
would've
was
been
like,
way back at the beginning,
yeah,
97%. You're right.
Yeah, it was like 95%.
I think adjusted for at least over 100 coins. I want to say maybe.
Yeah.
Since we've been over 100 coins.
Yeah, in January of 2008 or 2018, Bitcoin dominance dropped from 95% to like 35%. That was because of the altcoin mania. And then Bitcoin dominance went back up
ICOs.
to, pretty high in 2021. It dropped down to 38%. Right now we're sitting at 57%. I can see it's dropping, in the lower 40s this cycle, but we'll have to see. For the crypto bros out there that are heavily allocated to crypto and altcoins, not just the Bitcoin, but times like these make me want to be a Bitcoin maxi. But at the same time, there's not like if you have like under 100K in crypto, like you're not going to make, a significant amount within the short or the 4-year period just being allocated to Bitcoin. You have to be in some altcoins, you have to be in Ethereum, but know when to take profits, have a systematic process to know when to exit your positions, man. Others D is at 9.21%. Yeah. So I know that so we have a running candidate for Kamala Harris, Tim Waltz. I seen something online that he has 0 investments, no stocks, no bonds, no crypto, no real estate, no index funds, no mutual funds, no private equities, no retirement accounts. The potential vice president is financially literate. Do you think that's true, or is this like?
Well, if you go down in the comments, you look that he has pensions.
And
so
he's
got
real estate. He's got to have a house.
Yeah. So he'll somebody put teacher's pension. He was a military guy, so military pension. He'll have a congressional pension. He was a governor, so governor's pension plus Social Security. So he's going to be making probably around roughly $150,000 a year from all of his government pensions and Social Security, so he won't be broke. But here's the thing, like when it comes to like his portfolio allocation is all basically just one place, pensions. What happens if pensions get decimated? He's got no diversification. You know what I'm saying? Like why would you not be putting any money away in any other spot outside of just you're just relying on that? Like I understand that it's a good pensions are a good thing if you have it. I get that, but like, why would you not be taking advantage of the money that you're making, allocating it while you're working now, allocating it to spots where you could have more? So I mean, this is basically a guy who's just like, I mean, I hate to say leeching off the system because he earned these. So you're not leeching when you're a teacher, you're not leeching in the military, but like you're just relying on like these systems that costs. These pensions are expensive, like. To keep funding some of these pensions, maybe not so much the teachers' ones, but some of these other pensions, like congressional pensions, governor's pensions, like there's only so many governors, there's only so many congressional people. Teachers, if you work in a district with 1,000 teachers, like they're paying money into that, so it's continuing to replenish that, allowing the people that are retiring to pull from that. When you're in Congress, like there's only so many Congress people, so like it's taxpayer funded. Like taxpayers are funding that. Same thing with governors. There's 50 governors. And that's being funded by taxpayer money. So like you're leeching in a way off of the system where, I mean, you're not really, what are you really providing outside of lip service? Like the only ones that I really give them any credit for is being a teacher and being in the military, like serving and doing good in those areas. Like I would say he earned those pensions, but I don't know, man. Like these government, these civil service benefits are kind of wild. Like when you're in Congress, you're getting like $200,000 a year. Plus, like you only got it. Even if you're only in for 2 years, you automatically get a pension for the rest of your life. Like you don't even have to like tenure that. Like if you're a teacher, you got to be a teacher for a certain amount of time to get the pension.
Yeah.
Like you can be a congressman or congresswoman for like a small amount of time, and then you get a pension for life. Like that's wild.
Yeah.
You know what I mean?
That is wild, yeah.
And then like think about like I understand like the president, I get it. It's a huge position, but like you're a president for 4 years and you have like Secret Service for life that's got to be paid for. You get like something. I read something nuts like you're allocated like $12,000 for like stamps or some shit, something weird. Some weird like the benefits are just really wild. Like how they just waste money on people that were civil servants who like get paid better than like 99% of society, and they just get that benefit for the rest of their life. And it's no wonder why, you know, these people get into these positions of power and they don't want to let them go because the perks are just amazing. You know what I mean? But yeah, like here's a guy that's running on the Democrat ticket, 60 years old, and he doesn't have any real personal investments. I mean, I mean, it's crazy. It's crazy that he has nothing. And we know this because of his, like they have to disclose when they run. When they run for public office, so when he's running for governor, he has to disclose financial statements. And according to this tweet, his disclosures from both his final year in Congress and his time as governor in Minnesota, he showed no mutual funds, no bonds, no private equities, no other securities. He had no book deals, speaking fees, or crypto or racehorse interests, not even real estate. The couple sold their Mankato, Minnesota home after moving into the governor's mansion for below the $315,000 asking price. Wild, man. Like these are the people that are governing. They have no financial literacy themselves, and these are the ones that we got to look to solve our issues. And speaking of Congress, or speaking of races, last night there was a congressional race, a Democratic primary race, where notorious crypto skeptic Cori Bush lost in her primary. Pretty handedly too. 54.3% to 42.4. Lost by 12 points. That's a big margin to get smoked in a primary. So the Wesley Bell will get the nomination from the Democratic Party to run. So I mean, she can still run on a write-in or like for the actual election. But like that's a big statement by the people in her state to choose somebody else instead of her. And this is the first time in an election that we really got to see since like crypto's been a talking point for elections. We got to see an election play out with somebody who's on the other side of crypto get annihilated in an election by their own party. Not even like Republican to Democrat. Like they chose another Democrat who didn't have extreme crypto views over her. And again, I'm sure it's not all because of that, but it's definitely something that you have to take a look at as being a reason why she lost that race. It's kind of a big deal. I mean, I don't know. What are your thoughts on that?
I mean, you're anti-crypto. You're basically asking not to be nominated. You know, this is the future of finance. Like, you have to adapt to certain technologies, and I just feel like people are either uneducated or they're just not innovative. So I just think that if you want to be nominated, you have to be like involved in this space, especially with the young. If you're trying to get younger votes, how many people? What is the percentage of people that own crypto? It's getting up there. So you're losing a whole, you know, especially the one party, like the people that vote over this stuff. Like you're losing a lot of votes by just being anti-crypto. So
the number that I saw, I think, was like 50 million Americans at least own some crypto or some sort of crypto-related asset.
I want to look at the Japan markets real quick. What's
815.
What's the ticker?
Got it saved. I'll just punch it in and I'll find it real quick.
FTASC?
No.
Yeah, this is a bloodbath. Still down 16% from its all-time high. It saw a 25% drawdown in 2 weeks. That's not good.
Basically flat. It's up 0.12% right now. So
I put in the group chat just last night, and I was doing some like intense research. Do you know? Have you ever heard of MetaPlanet?
MetaPlanet.
MetaPlanet. So they're basically a company. They're $1 billion company, and they are increasing their Bitcoin holding. They have a strategic treasury transformation where they're basically going all in on crypto, right? And I looked at it, and MetaPlanet has a bunch of parent companies, like parent organizations: Red Planet Holdings, Red Planet Hotels, and Polaris Holdings. So do you think, like, and this is Japan market or companies that are worth billions and billions of dollars, and they're going all in on Bitcoin. Do you think there's ever a chance that this was Japan's secretly printing yen to buy Bitcoin, or this was orchestrated to crash the markets in order to buy the hardest, load up? I know this is a conspiracy, but I was like, it was late, and I was just looking into this, and obviously there's only 21 million Bitcoins. It's a scarce asset. Do you think this could be part of it? Because these companies are worth billions of dollars. They own hotel chains, restaurant chains. Like they're pretty monopolized over there with this. With when I was looking into this, I don't know if you ever heard of it. They're called MetaPlanet.
No, I can't really speak to it because I don't really have a lot of insight into that. So I'd have to read into it to just form an opinion.
It just shows us that like after going through this, like how like more focused, and I'm going to be paying attention to foreign markets and seeing what's going on, because it's more than just the NASDAQ. It's more than just what the Fed decision is with interest and rates and stuff like that. So it's crazy stuff, man. But we're here. We're surviving. You're the Bitcoin maxi. You haven't lost any Bitcoin. 1 Bitcoin equals 1 Bitcoin.
1 Bitcoin still equals 1 Bitcoin. Like I
one Ethereum equals 1 Ethereum.
Yeah, I mean, you see the USD value of these assets. If you like me, I believe in Bitcoin, and I believe it's the best asset in the world. And when the USD price crashes 30%, and I look at my portfolio, the USD values change, but I still have the same amount of Bitcoin. Actually, I have more because I added during this dip. I added some Satoshis. Not a lot, but I added a little bit. So I have more Satoshis and I have more Bitcoin than I had.
And another thing I learned from this, and the viewers can get value from, is never be 100% allocated to any asset class. I was trying to get the most out of this, which controversially contradicts itself, because you're thinking if you're 100% invested in crypto that you're going to reap the most rewards because you're whole. But if you don't have at least 5% cash on the side to be able to buy on these dips like that happen, you're actually hurting yourself in the long times.
Not only that, man, you got to I have a cash position. It's not as big as it was because of different life events that are going on, but you got to have some cash on the side because your quality of life trumps everything, man. It just trumps everything. Like, you don't want to be in a position where you're like, how do I pay for it? How do I buy groceries? Like, you don't ever want to be in that spot. So like, cash is like, people say cash isn't a position, and it's not, because in investing wise it's not, but like cash is a life position, because you want to be able to, in times like this, like the last thing you want to do is like watch your portfolio take a 40% haircut and then sell some of that to be liquid.
Because you don't have any cash.
So like, yes, you want to have cash on the side to buy dips, but you want to also have cash that you're not buying dips with, but that you're also just like surviving.
And that's where like I'm going through right now, because when I say 100, like I'm 100% allocated, like, right. Yeah. And now that we had this correction, not only do I not have cash to buy the dips, now I don't want to sell more to provide my lifestyle. So I'm kind of like, I got to just
find ways to make money.
Find ways to make money outside, like increase, whether it's increasing your cash flow, making money in other ways, but it's just tough, So like times like these, like especially after FTX, Terra Luna, all those black swan events, I find the most growth in my education. I'm forced to look inside my psychology, my risk tolerance, my decision-making process. I am every time, and it sucks that you have to go through these types of pain and suffering to level up in certain ways. But it's bittersweet because if things just kept going up, when if I made a rash decision later in the cycle and got annihilated trying to play with leverage, or I'm glad that it sucks that it happened during the boring zone right before the bananas when things are going to get crazy. But you can only take, you got to look inside and see what you can take out of it, right? Like, what are the pros? What are the cons? What could you do differently? Because if you're not getting better, you're not growing, what was the point? They could be expensive lessons. Like, don't get me wrong. This was a very expensive lesson, but how can I make sure this never happens again? How can I be more well positioned?
That, and the next time we have like a pretty significant run up, I mean, I don't know what percentage I'd throw out there.
Take
some money into cash just so you're like, all right, like that's money that, we didn't have before, and take it in something that you don't make. Maybe, you don't do it in ETH or Bitcoin. You do it in something else that's you have less attachment to that. Yeah, maybe this is going to 20x, but like, yeah, maybe it does. But like the value that my life is going to have right now by doing this, and just the quality of life, and the quality of life is a rippling effect. So if I can improve my quality of life today, then that means the quality of life will be better tomorrow. And then that'll build upon itself. So sometimes not like missing out on that big, like 20x in some other little shit coin you got, or whatever the case may be, can be outweighed by the fact that you're just improving your quality of life for now and for the future, because you're making things a little bit more comfortable.
Yeah. And especially like there's a sunk cost fallacy, like throwing bad money at something when like, how they say this time's different. Like, what are the probabilities of you thinking that normally altcoins and meme coins top out towards the end of the market, and it looks like altcoins and meme coins are perform like they, at least in March they had a local top. Do you think there's a chance where majors top out later in the cycle and the meme coins and the altcoins topped out before and kind of threw everyone off? Because the reason why I didn't take heavy profits was because when the majors, and I know this, majors like at least Ethereum, you would argue that's the biggest altcoin, that still hasn't broken its all-time high. So I'm not looking to take profits on my altcoins until once I see Ethereum break its all-time high. And that's what everyone was thinking. That was the consensus. So is there maybe it's the opposite? Maybe it peaked out sooner?
Human nature is, and this happens every cycle, and I have nothing to make me believe it won't happen again. Bitcoin and Ethereum, well, Bitcoin for sure, because Bitcoin does it as Big Daddy on its own, goes parabolic. It has like a 20-day run at the end of the cycle where it's just like every day's up, right? Reaches that top and then starts to sell off. And part of that sell-off is people taking their insane profits from Bitcoin, which is only maybe a 2x or 3x or whatever the case may be, and then going to find the next gem that they can 50x. And then money just pours into all the alts. And you just see like alts do 100% jumps, 200% jumps, 300% jumps, because all this money's coming from Bitcoin, and they go put it in a coin that might only be like $1 or $2 a coin, but they have all this excess capital in something they believe in, and they just pour liquidity into that coin. Like something like Cardano, right? Cardano might be, let's say when Bitcoin hits its top, Cardano's sitting at like $2 or $3. And then people just start flooding into Cardano. It's not difficult for Cardano to go from $2 to $10, 5x. Whereas if Bitcoin tops out at 150, that's only a 3x from here. And I don't think everybody that's going to get that 150 is going to be in at 50. Them people haven't even got in here yet. So they may only 2x their money in Bitcoin and then take all that money and go find the next coin they can 5, 10, or 20x. And then that's what ends up happening. The money pours into the altcoins, and then those, Ethereum makes its final move and final push. And then some coin that we don't even know exists right now is going to be that 100x coin that we're going to be talking about on the podcast at some point, being like, man,
it's not even created yet.
Yeah, that or there is like maybe one of these other like I'd throw it out there, like a Chainlink. It's sitting at $11. Maybe Chainlink by the end of the cycle is a $200 or $300 coin, and we're just like, holy shit, like. Imagine buying Chainlink at $11 and now it's sitting at $300, and you could have basically like 30x your money by putting it in Chainlink. And that's a coin that we've talked about before, a project that has a lot of shit going on behind the scenes that actually is utility, sitting at $11 right now. And we may see that top out at $200 or $300. That's a 20 or 30x from where we're sitting right now. And that's a coin we know about, that we've talked about. So think about something that's sitting out there that's not even on our radar, that people are going to eye. And you know, with the power of social media, somebody's going to say something, it's going to hit some steam, it's going to go viral, and everybody hits that coin, and maybe it's under $1, and all of a sudden it goes from under $1 to $75, and people 75x their money, and then of course it, like, the run up is only equaled by the run down in those coins. Like it goes up, and you got to be like, it don't, you know what I mean? And you got to get the F out.
What were your thoughts? But going back to 2019, when Bitcoin dropped from like 6,800 down to like $3,000, then it goes up to 15K, and then we have the pandemic COVID crash when it goes back down to, you know, that basically to that low almost of in December. You know, sitting through 100, 200, almost 200 days of watching your portfolio do a 300% because you were buying the lows, and then just being, celebrating your win, and then just seeing it lose 70% of its value from a COVID crash, thinking it's all over.
Yeah, I don't know.
Like you gotta.
I don't know if I share this actually now that I think about it, but the hardest point of this whole Bitcoin journey of 10 plus years for me was watching 2018 play out. That was the hardest because I accumulated believing, and then I watched my portfolio go from less than 4 figures USD value, right, to basically 6 figures of value at the top in 2017. Because at that time I owned a bunch of Litecoin, I owned some Ethereum, and I owned Bitcoin. I owned a conglomerate of coins, mostly still, even at that time. Even at that time, I still owned
2017, it went to 6 figures?
Yeah, at the top of 2017. In December of 2017, I think I eclipsed like 102,000 was like what my portfolio max was at that in USD value, right? And then I didn't sell until a little bit after that, because I sold. It was going down. It was on its way down. I didn't sell the top. I didn't time the top perfect, but I made my first big exit, a large percentage exit, shortly thereafter. Not because I didn't believe, but because I was like, listen, I'm in this thing for like hundreds of dollars, and I've just like done something that I never thought I could do. I basically made at the time more than a whole year's salary straight up cash. You know what I mean? So I cash out, but then I go back to doing what I was doing, accumulating again, because there was much more ways to get free Bitcoin back then than there is now that people didn't realize that I was like a master at doing at the time. So got my USD value, kept accumulating coins, but then it wasn't what I was losing USD wise that was bothering me. It was just watching it go from like 20,000 to like 3. And just watching it little by little, little by little, little by little, because I had an emotional attachment that I didn't have in 2013 to 2017, because I came in at the top and I was accumulating while it was going down. So I built during that, and then I watched what I had built, even though I had already made my cash out, so I wasn't really losing because I had the USD value. Right? But I watched what I had built, even though it wasn't necessarily what I had built anymore. I just watched it just like going down, and I'm just like, damn, like one thought was like, thank God I cashed out, because I got out way above 3K, right? And the other thought was like, man, like maybe I was wrong.
Mm-hmm.
I saw it as being a future of everything I believe now. I saw it, but like that rattled my confidence, because I didn't fully, completely understand the cycles yet. And I didn't fully, completely understand how the Fed was really working behind the scenes after 2008, like the GFC. I hadn't learned well enough yet the TradFi system to understand why Bitcoin was the answer. So all that happens, and then COVID happens. And then markets drop 50%. I'm talking like all markets dropped like 50%. It's like the last thing I was thinking about was Bitcoin. The last thing I was thinking about was like, stop. I'm just like, are we dying from like the plague or whatever? You know what I mean? That's what everybody's thinking. And then I remember when I was like watching on CNBC and they were talking about giving money out to people.
For COVID?
Yep. And I remember researching because I'm like, oh, we're gonna get free money. Oh, that's a big deal. That's cool. And then I started to like go down the rabbit hole, and then I like came upon what's been happening since '08 and '09, and I'm like, in my mind, in most people's mind, $789 billion was the TARP plan, and we're like, oh, that was a lot of money that they, saved the system with. And then I did research, and I'm like, yo, like 30 to 50 billion every single month is getting injected into the economy since '08. And I'm looking at this in 2020. I'm doing the math. I'm like, yo, over a decade, these dudes have put trillions of dollars into the system that doesn't exist. And now I'm like re-looking at my thesis with Bitcoin. I'm like, yo. And then I don't remember like how quickly or what coincided, but like then you start to see everything move. Then you see markets move, traditional markets all of a sudden, just like the liquidity is just getting pumped into equities. And I'm like, yo, like that's what happened from '08 to 20. Like the market's going up because they're throwing all this money in. And I'm like, the money's also going to Bitcoin, but like not as many people know about Bitcoin. Then all of a sudden 2020 happens and everybody's talking about everything. And you're watching this thing go from 30 to 60. And I'm like, yo, I was right. Holy shit. Why didn't I sell everything I had? Because it's like, that's the other thing too. Like you're in early, but like nobody knows anything. Hindsight's always 2020. Like people are like, oh yeah, you're lucky. It's like, oh, you're a whole coiner. You got like, it's like, yeah, dude, but like I knew, but I didn't like, I was never, at no point was I ever all in. You know what I mean? Like imagine if I'm in your spot and I'm 100% allocated and the market drops 90%. That means I lost 90% of everything I got. Like that time was way more dangerous to invest than today.
Mm-hmm.
When it was hundreds of dollars, it was way more dangerous to put everything you had than it is when Bitcoin's at 50 or 60,000 because it's established. Mm-hmm. The drops are going to be big, but it's never going to zero. When it was $500 or $600, dude, the danger of shit going to zero was real. Like for me to take $20,000 and buy Bitcoin with 20,000, and at the time that represented an enormous amount of my net worth, and for it to go to zero would have been crippling and devastating. Mm-hmm. But imagine if I would have done that, and then today sitting at 100x that, I'm $2 million I'm sitting on if I would have done that at that point. But it's like hindsight's always 2020. No, very few people did that. And the people that did had nothing really to risk. They didn't have families. They didn't have kids. Most people that were in that spot, right place, right time, right circumstances, and did those types of things. For me, I had to get it the hard way, earning it, putting the little bit that I had, a little bit here and there, accumulating a nice amount, doing things, fixing, like I said, like I never regret that move that I made. And that's why I'm talking to you the way that I do. Like I don't like the amount that I took out was multiple hundreds of thousands of dollars in today's value, crypto wise, market wise. And I didn't take out 100,000. The top was 100 that I had to play with, and I didn't liquidate everything.
That's the thing, the future value.
So you don't, but the value that it brought to my quality of life, what that money did to like let me sleep better at night, take care of some other bills, and to be in a position where I was like, oh, I can look in the bank and I'm like, I'm not broke. I don't live paycheck to paycheck. 100%, 100%. Because I left the paycheck to paycheck living for that period of time, because I could basically almost any serious life event could have happened to me at that time, and I was prepared for it financially, which I had never been in my entire adult life. So it allowed me that room with 2 kids at home and a wife, that if that catastrophic event happened that I really would have hated to have to pay money for, I could have taken that hit. Yeah. Which even today, like the hard times that I'm going through, like fiat wise, what I have left over is left still from what I had cashed out. And if I didn't do that, I'm in a world of different circumstances right now. So even 2018, 2017, we're talking 7-8 years later, I'm still feeling the effects of making that decision on my quality of life.
Yeah, so we're getting up to the end of this. Do you have any like last minute thoughts, like whether it's a learning lesson or people that are sitting through this, their portfolios are cut in half or at least down, average at least 30%. Like, just what do you have to say to them just to give them some hope and optimism for the months to come?
Well, if you're still here, you're doing good. I mean, this is the markets, man. This is crypto. This is investing. Like, if you're investing, you should have a thesis. You should have a plan. And when things like this happen, it shouldn't make you alter that plan to the extent of exiting markets completely. But maybe you have to do what Troy is contemplating. Change a little bit of some of the logistics of what you're doing with that plan. But for me, the strategy is the same. Buy great assets and hold them through all the dips and the accelerations in markets and all of that. So like when these types of events happen and you lose 35% of your portfolio, those are paper losses that I wasn't selling today, tomorrow, next week, the week. I didn't. So I still have the same amount of Bitcoin, actually a little bit more than I had before it started. And the other little shit coins that I have in my portfolio are still the same that I had. So when markets do what they do, I'll still be able to feel the full effects of the run-ups. Now, if you're a trader, if you're doing leverage and you're doing all that stuff, then I'm not the guy to talk to about that stuff. I would say to completely leave that stuff alone and avoid it. But again, I don't do it, so I'm not the right person to ask about that. If you have a strategy that works for you and it's been working for you, who the hell am I to tell you to do anything different? But if this week decimated you or put you in a really, really bad position where it really affected your quality of life negatively, at the very least, you got to take a look at what you're doing and maybe do something different.
Yeah. And what I have to add to that is just never be 100% allocated to investing. Make sure you have some lifestyle chips on the side. Being able to have dry powder to buy these dips, improve your quality of life. Like I said, being 100% allocated to investing contradicts itself because you don't have the cash on the side to, unless you're raising cash through, businesses or, work, having cash is a position, and that's what I learned from this is, although I'm 100% allocated still to crypto, it's having me reevaluate my circumstances and making sure that I have at least 5% allocated to cash on the side.
Yeah.
So don't trust, verify.
Don't trust, verify.
You're going to survive. Everything's going to be better. Just make sure, like you said, just rebalance things, change the logistics if you got decimated, but dollar cost averaging is probably the best bet moving forward. And yeah,
that's it. See you next week, guys.
See you next week.